Hello and welcome to the FinTech Finance Virtual Arena where you're joining me here today. Now today we've got a very special episode because we're going to be talking all about open finance with some real specialists in the field. And joining me we have Jason O'Shaughnessy from InvestNet Yodlee and Samantha Seaton over at Moneyhub. So guys, thank you so much for joining me. Could I actually get you guys to intro yourself? I always think it sounds better than me giving an intro like that. So Jason, could you kick us off with an intro to yourself and Yodlee, please?
Yeah, sure, Douglas. So Jason O'Shaughnessy, I head up the international business for Yodlee. So that's basically everything outside of the US. It's a great role. We're currently looking at open banking initiatives all the way around the world. It's my second time back at Yodlee. So first time was 15 years ago when I helped start up the international business when Yodlee first looked to open up their markets outside of the US. And in that time, we've had an amazing journey of both opening up data to consumers and fintech companies through to leading the charge for open banking.
Absolutely perfectly placed for today's discussion. Thank you. And Samantha, could you also give our viewers who may not be aware a bit of info about your role and Moneyhub?
So everyone calls me Sam, apart from my mother when I'm in trouble, and then it's Samantha. So everyone calls me Sam, and I'm the CEO of Moneyhub, and we're on a mission, I would say, at Moneyhub to enhance the lifetime financial wellness of people, their communities, and their businesses. And obviously, to do that, we believe there's really three questions everyone wants to answer, whether you're a consumer or a business, which is what have I got, what do I need, and how do I get it? And then once you've got it, am I on track, right? So once you've set it up. So that's fundamentally what Moneyhub is all about, and we believe open finance underpins enabling those three questions to be answered, and then also for the tracking of that.
Blimey. Well, with that in mind, if we could actually kick off and start with that then, Sam, before we go any further, could you actually, I'm very conscious that we might fall into a buzzword kind of catch all. So could you tell our viewers, how do you identify open finance exactly, and how does it differ from open banking?
So to me, I mean, some people have heard me say open banking is like the first step, and open finance is the next step, and open data is the third step, and 1D, 2D, and 3D. But the real difference is, for me, is that open banking is covered by PSD2 legislation, which is the payments legislation, which basically means that all payment accounts have to be made available to share with the people that basically use them. So for me, with my current account or my credit card, they're both payment accounts. They are now allowed to be shared, with an AISP or a TISP or a PISP provider for other value exchange services. So that's kind of open banking in a nutshell. But open finance takes it further, whereby you can also bring in investments, such as your pensions or your ISA. It also brings in maybe your property. Maybe you've got some rental properties. So open finance for me is actually not just your open banking accounts, but also other areas of your money that you need to bring together on one place to give you a kind of a holistic picture of your money. So open banking is a subset of open finance.
That's absolutely incredible. And I guess, going further than that, I always like having real life examples. Jason, if it is a separate or at least a kind of new underpinning, can you give our viewers some examples of open finance, please?
Yeah, so actually Moneyhub is probably a good example, because you've got the connection to open banking that gives you access to the payment accounts, but then you've also got connections to third parties like Yodlee, who then provide you access to your other accounts, so your investments, your mortgages, your loans, your pensions. And if you think about what open banking, so open finance is really only delivering what consumers and fintechs have been able to do for the last 15, 20 years with companies like Yodlee. It's just that now we're in the open banking world, specifically if you look at Europe and the limitation on payment accounts. But the innovation is going to come from companies like budgeting solutions, wealth advisory type solutions, all of those kind of solutions. They're the ones that need to have access to more data than what's currently available via open banking. So there are many applications out there that have been limited by the scope of open banking. We all hope that open finance is adopted really quickly and it's made available, and we can all start doing things through APIs. But yeah, I would say wealth, budgeting, PFM, those kind of solutions is where the innovation comes from, the open finance access.
Very exciting. And Sam, I guess when we're hearing about all these value-added services, one thing that's always been quite critical to me when looking at fintech and open banking is it sometimes has yet to have that kind of Netflix moment. What do you think that will be for open finance?
For open finance, well, I think we've got to take a step back for a moment, because in effect, where we're at the moment is we've just invented electricity. That's how I see it. So if you think about it, in the 1900s, when you had just been able to turn a light switch on, get rid of your candles, I don't think anyone could see, the toaster, the kettle, the even in the hobbies area, the electric train, toys that were, hours of fun were had with. And I guess what I would say is I get a little bit upset when everyone's like, oh, open banking hasn't made, any real impact. It's been a waste of money. And it's like, that is like saying when you've turned electricity on and people can now actually get rid of their candles, that we've spent zillions getting everyone so they can flick a light switch on, and oh, it's not much better than the candle, is it? You can still see, it's no different. I mean, how ridiculous is that? So I think, can we just give it a little bit of time? If you think about some of the legacy systems in place with the way underwriting, for example, is done, it will take a little bit of time for them to shift over to an open banking affordability assessment from the traditional ways that they have been underwriting. But once it's happened, we'll never even understand how we did it the old way. Exactly as Netflix now, we wonder, why did we ever watch TV episode by episode each week and with ads? I mean, why did we ever do that? Seems like a long time ago in another era. So I think we're just, on the cusp of some amazing transformation with open banking.
And I think, just to add to Samantha, she makes the perfect point, which I've been trying to make to organizations for the last 2 years, is that for me, I suppose I had the luxury of being involved in data access for 15 years. And then I went out and for 3 years and did things like in cybersecurity and SME lending. And then I've come back into this industry, which I love. But coming back feels like open banking has taken the industry back by 5 years, but it will absolutely bring it forward by 20 years very quickly. But we're just now going through that pain barrier. Like it's like anything else. When you legislate it, when you put various processes in place, it slows everybody down. I mean, if you look at PSD2 and open banking specifically to that, when this was going through the motion to go live, it was all about giving more consumers access to data and creating innovation. Well, there are many fintech companies that can't create innovation really quickly because they have to go through this whole regulation process. So now we will eventually get around this and it will become much better in 2, 3, 4 years time, but we have kind of stepped back. It's not as if we couldn't do all of this plus more 2, 3 years ago, but to Samantha's point, it will absolutely get better. It's just now we're feeling a little bit of pain.
I mean, and just on that, Doug, before we go, you asked what was the Netflix moment. So for me, what we are getting closer to every day is the ability to automatically manage your money. So, and I say that because who really likes moving money about to different places and, getting it into the right, having to remember that if you get a pay rise, that you should really put 10% of that into a savings account. I mean, we know all this stuff and, it's not rocket science. But who's got the bandwidth to do all this? Who's tracking their loan to value ratio? I mean, I'm not tracking mine. And the minute you go through different bands, there's better deals on offer. Do we go and take advantage of them? Do we do it? No, but where we're really heading, so the Netflix moment for me will be the automation that's coming of money management. So that admin of all the money. So every penny I earn actually works harder, goes further without me doing anything.
I mean, I'm lazy, so I love hearing about some lazy money. And Jason, I've got to, can I get you to chime in on that? What's your Netflix moment for open finance?
Yeah, do you know, it's, I think ultimately, Samantha's right. When everything is automated and you take the pain away from me, and it feels like we're picking on wealth and PFM, but when I look at PFM solutions, they're a bit like fitness apps. I mean, it's the same thing. Most of the people you're targeting to help them better understand their finances, 80% of them roughly are managing debt. So how do you excite them about using something that actually is going to put them in a really good place? But it's a bit like, I suppose, like I said, a fitness app. I mean, if you log into the 1st of January, you use your fitness app, you use it religiously, and at the end of the month, you log in, it says, well, you're still unfit and you're not very healthy, you've made no progress. It's a bit like a money management app. But at the end of the month, I still don't have any money to put over here, and I still don't have any money to put over there. I'm not really going to get gains. But I think with the tools, and Moneyhub have done this very well, with the tools that you put together that automate that process and kind of educate me and highlight things that I should need to be aware of, that's when these tools become really clever. Because the majority of us, we're lazy. We want tools that direct us and do stuff for us and make it easy. And the whole thing around open banking at the moment, being able to see your data really easily every day, being able to make payments with inside that environment and move money around without having to go somewhere else and pop out and come back in, that's really cool. I think, there will be some amazing apps that none of us can think of that will come out in the next 2 or 3 years with using open banking and open finance and data. Some of those you see already where, I see some solutions where they look at all of your transaction data every day and they pull out your subscriptions and say, hey, did you know you continuously subscribe to these 2 things? A simple solution, but works really well, and it uses open banking. And then the next step would be, well, if you're plugging into the payment APIs, I can probably then, transfer funds somewhere else or cancel that payment account, for example.
I guess, Sam, actually, you brought up this kind of a movement of legacy and eras. And I guess one thing I would categorize the early part of open banking was maybe when it came to data sharing being critical, screen scraping. Jason, can I get your opinion? Do you think screen scraping is still going to have a role to play with open finance into the next decade?
Yeah, it's a really good question. I think, in the perfect world, we all want structured data feeds with every institution out in the marketplace giving us all of the data that we want that consumers can then really access, and third-party apps, whether they're provided by innovative fintechs through to large banks, they want that data in a structured, direct feed way of doing things, and so that is the direction, and hopefully we're moving that way. As it stands today, though, that's not the reality. So, you talk about some winners and losers in this space. I mean, you could argue that if you're a budgeting app or a financial planning app, that it's a loser because at the end of the day, you're only getting transactional data, and you can't really give people a good money management experience if you can't see your mortgage or your loan or your investment account. So open banking doesn't deliver everything. I think in a world where that doesn't deliver everything, screen scraping from reputable organizations, and obviously I'm going to say Yodlee fits in that space. We pioneered that back in 1999. We're regulated just like a bank, regardless of how we get data, we do it securely. But what that does mean is where the rest of the marketplace and industry is taking its time to catch up. So that is providing you access to all of your account types through your feeds. Also the smaller institutions, credit unions and pensions and those types of institutions which do not have data feeds, then aggregation is the way to go. You can pull in your account types. And what we hope is that then continues to put pressure on those institutions to give you access to data via APIs, which is exactly how open banking came around. That aggregation providers like us put pressure on institutions. It said, look, you've got millions of your customers are accessing your data through third-party apps. Do you want to have some kind of control and get and provide us data feeds? I think it's the same today. So I think so in Europe specifically, for the next couple of years, I think aggregation plays a big role and still then enables solutions to deliver exactly what they want to what consumers are looking for. But then you've got industries like Australia, where actually open banking on day one is giving you everything. It's giving you mortgage, loans, investments, super funds, all of those accounts from the major banks. So I think in other countries which are doing open banking, it's kind of open banking version 2 and aiming to deliver everything you want. In the case of Europe, not so much, but Samantha will probably, I don't know if she agrees or disagrees, but it feels like it's moving in that direction. It's just very slow.
Sure, and yeah, Sam, could I actually get your input on that? Is Europe kind of being hamstrung by that process?
Well, I think we're in quite a good place to speak to this, because we were, reliant on screen scraping before open banking to provide people with a holistic picture of their finances, which is what, we really believe is important. So we saw the changeover, from pre-open banking to post-open banking. And I'd probably just call out a few interesting snippets on that, which is a lot of consumers, actually didn't understand the difference between screen scraping and open banking. So as much as there is clearly a difference, and we're a big advocate of APIs because we love the tokenized access, and we also love the way that they are very reliable, and a great form of data in terms of being able to share it with the consumer who's given their consent to do that, but not at the expense of not having an account. So if you told any of our customers who are used to pulling through all of their finances that because we won't screen scrape, we won't pull through your loan with, Santander, they would say, please screen scrape it, switch it on, because they've already made the kind of leap into being able to see everything. So it's a little bit like once you've had something, you don't want to go back. And then just to call out that even under PSD2 legislation, HSBC, who sit behind the Marks and Spencer and John Lewis credit cards, have opted to do screen scraping plus to comply with PSD2 legislation. So now we're all legally screen scraping Marks and Spencer and John Lewis, because that is the only way we get that data for the consumer under the legislation. So suddenly even HSBC thinks screen scraping is okay. So I don't really know what to say to you apart from that.
Samantha's right. I mean, from a consumer's perspective, if I'm connecting an account via open banking API or from web scraping, I really don't know the difference. There'll be a small percentage of but I don't know. But I say, it's the key thing is that you've got a provider in the background that is ensuring that the data is secure in both ways of accessing that data.
Definitely. And I mean, it is interesting to hear how suddenly when the financial institutions see how it can work for them, they're all for it. I mean, with that in mind, we have talked about how open finance and open banking is kind of providing that wow moment for consumers, for the banks. But Sam, could I also come back to you and ask, what's it going to do for the large scale institutions? We have just heard effectively how it's enabling HSBC, but going forward, what's it going to mean for the large scale institutions?
Well, I think they break into two tranches really. So there's the companies that have kind of had access to in a way this level of data. So I would say that the credit bureaus, the likes of Visa and MasterCard, and also the banks. So they kind of fall into a camp where they've been in the privileged position to have this data and need this data for various reasons, but in a completely different mode than what they're able to necessarily get it now because of in effect, the way we're moving with data. So GDPR, open banking legislation, and moving on, it's all about consumer consent, which I am a massive fan of. So, what are you doing with my data? Where is it going? Can I, who's got it and why?
It's a commodity.
I really think that's important, right? It's my data. So that group have got to get their head around a completely different way of dealing with data that they're not used to. And then on top of that, you've got all the other companies out there who've never had access to this data, who suddenly can access it with their customers' consent to do fantastic value exchange products and services. And so this is where we come back to this electricity moment. If you think about, it won't be long before mortgages are put up for auction. I mean, do you really care who provides your mortgage? I actually don't care. Just make sure I'm getting the best rate, the best deal for me at the time. In fact, I wouldn't mind if I had a different mortgage provider every day. I'm not bothered. I've just got to pay the money to pay it off, right? So I think there's a big shift coming in terms of, and of course, when every company in the world can access this data with a customer's consent, I think we're going to see some big changes. I mean, one a bit closer to home, I'll just give you an example. Aon is, a pension provider and also a benefits platform. And they've been brilliant at actually surfacing the most pertinent benefits for me, in terms of I've got 300 benefits. You link up one of your main spending accounts, whether it's a credit card or a current account. They just say, look, just link up your main spending account. Obviously, it pulls through 12 months transactions, and then they immediately say, so these are the top 10 benefits, and this is how much you could have saved if you made use of those benefits. I mean, that's amazing. That's a really, really quick win. Well, have we seen any benefits like that from the kind of incumbents, if you like, in this area? And I would say no.
No, and I think that's kind of bring it down to that grassroots level. It's going to be so critical to really enable open finance to become successful. But also, Jason, could I also get your perspective on what it's going to do for the financial institutions?
First of all, Samantha's given me a great idea for a business. Switch mortgage brokers every single day for better rate. I love that idea. That is a business in the waiting, absolutely. So I think with large financial institutions, I think what they're starting to realize now is, they can offer there's two things. One, they can offer the same types of things that innovative fintechs can offer. There's nothing different. When you see, most innovative fintech companies offering cool services is because the banks and the big, large financial institutions haven't been doing it. They should have been doing it, but they haven't been doing it. What they are starting to realize very quickly is with open banking access, they've been able to do things that they haven't been able to do before, and that is automate some of their online processes. So probably up until open banking, any player in that space that wasn't connected to an aggregator, which is most of them outside of the US, they're offering services where they're offering automation online, but nothing's really automated. In the back end, that stops. So, if you apply for a loan or a mortgage, although I feel like I may have had an automated experience online, in the background, there's 1,000 people running around and moving paper around to try and get things done. Now they can get your bank statement data to do a real-time affordability test to give you a loan of maybe up to $5,000. They haven't had that luxury before. So I think, all the benefits that there are for the fintech players in this space, they're just exactly the same for large financial institutions.
Very interesting. And Sam, could I going back to that point of swapping your mortgage provider every day.
I'm registering that.
Make sure to loop me in, guys, when you create it.
Do I get 1% equity on this, Jason, just for the idea, please?
Absolutely.
But with that in mind, being able to swap that provider so quickly and rapidly, is that scaring maybe the traditional financial institutions, losing that kind of that brand presence? Because if people don't actually care who provides their mortgage, does that show that open finance has highlighted the fact that no one cares who they bank with? It's just they want the best product.
Well, I think it should scare everyone, but there are some areas where people will be less sensitive, to what I call loyalty than others. So people have got to work out the new products and services of the future, because it is very similar. I still remember, I think it was Rupert Murdoch, and everyone said with Sky, he'd never make that work because no one's going to pay for TV. And, I kind of roll forward to now, and I think, how wrong was everyone that ever told him that? Because who isn't paying for TV now, right? It's just the opposite. So I think you've got to just understand that, although we may auction our mortgages, you could argue that that's even better for the financial institutions that are mortgaging, because what they get is I only take the mortgages that are right for my book at this point in time, because you've got to remember how it works behind the scenes. You've got to remember that actually what one day I can lend on, another day I can't, because my capital adequacy has changed, my this has changed. So actually, funnily enough, you could argue it's a completely better system all round for the consumer and the providers, because basically the providers that can actually take that mortgage and at that point on that day can do it, and the other ones that can't don't take it. And actually the fact that it does all move around, I think we always look at it through the wrong lens rather than through a forward-looking lens. And I just think everyone's got to stop doing that, because the world is going to change whether we like it or not. People are going to pay for TV whether you believe it or not. And so get with the program.
Yeah, don't be left behind by history. And sorry to bring up an anecdote as a moderator, but all I can think of is that Henry Ford quote, where it's like, if I offered people, would they just go for faster horses? And it does scream to me that we're at this moment.
Doug, on that faster horses, so I have a screenshot which in 1900 in New York on the main street, you can spot one horse, you can spot one car amongst all the horses and carriages, and then 13 years later, only 13 years later, you can't see a horse.
Wow.
And I just think if you can see that change in 13 years back then.
Yeah. Let's be honest.
And when cars arrived, they even didn't think they were innovative. Everyone said, oh, they're rubbish. They don't go through forwards. They conk out halfway on a journey. It does make me chuckle.
Yeah, I mean, having that 1,000, 2,000, 5,000 years of using a horse, you're not going to change overnight. But then it changed in 13 years, so we might be in the same system with banking and finance. That's absolutely brilliant. We've now talked about how it's going to help individual customers, open finance, how it's going to help the financial institutions, or at least galvanize them in a way. But Jason, could I get your input? And Sam, I'll also come back to you on this as well. Could I see how open finance is going to enable businesses, enterprises, sole traders actually gain better visibility of their businesses?
Yeah, so I mean, it's quite a wide and varied answer because there's so many different businesses that do use different metrics. But I mean, one of the classic user cases we're starting to see at the moment is actually with open banking. You're starting to see, and one of the big demands from large financial institutions is actually they're looking at how do they automate their treasury system so they can access corporate account data, for example. That's pretty big. There's a lot of banks that's saying, this is amazing. We need to get access to corporate account data. We need our corporate customers, so the large, big companies who want to access their thousands of accounts that they've got across multiple big organizations. We can automate that process. Corporate account data has always been difficult to get access to. So that's one way, and that gives them great visibility and their customers great visibility of everything they've got on their global operations. If you're a small business, accounting packages have been doing a great job for years. And actually that probably is a similar scenario to the point that you guys both brought up on the Ford and the horse, where, I remember we signed our first accounting package, I think it was in 2010, and said, look, we're sick and tired of our customers having to upload their bank statements. It really drives us mad. It doesn't give adoption. One company did it, and within 12 months, all of the online accounting packages in the UK, barring one, was connecting to aggregation at the time to get their data. And now they all plug in directly into open banking APIs. It makes sense for them. So you can see how businesses are benefiting from that. And they're probably the first to move because they have to have their data in tools that help them run their business. And if you're a small business, the last thing you want to do is download and upload statements or do anything manual. I mean, if you're Jason, the hairdresser, or Tracy, the plumber, the last thing you want to do is be plugging into stuff, and it just wants to happen in the background. And we're seeing a lot of that.
Did you see an alternative universe Jason just then? Well, yeah, and Sam, I'm really interested in your input on this as well, because I think having that kind of financial visibility improves literacy when it comes to finance. So, I mean, how do you see SMEs all the way up to the enterprise level solutions benefiting from open finance?
For me, the main thing that I think, because I agree with everything Jason's just said in that mode, is probably just the ability to move with the times in terms of the way you can personalize your products and services. So it's been difficult to personalize product, financial services, in the main, but we've now kind of crossed that chasm, if you like. So there's no reason why any company can't really engage with me in a way that I talk about the fact that I bought a bed, which I think you meant to do every 8 years, but I think we did it about after 15 years. So but the thing that staggered me was that on the internet for about 3 months, because I remember making a bit of a note of it, that I everyone was trying to sell me beds for 3 months after that, and actually I'd bought the bed, and if any of them had tried to sell me sheets and pillows and a new duvet, I'd have been quids in, but no one ever bothered, and eventually they all gave up trying to sell me a bed too. But I think this is the bit that we haven't yet seen, is that being able to service me in a way that actually I want. It's helpful, it's what I need when I need it, and whether that's a financial services product or actually much wider than that in terms of the retail market. It's going to be huge.
It's very exciting, and I can only point really to seeing obviously the news that has come out this week with Google Pay bringing in that platformification with not only businesses and also finance operations. It's going to be very interesting to see that platformification, putting it all together, and hopefully, as you said, offering up value-added services rather than the bed you've already bought.
I just want to add to that. I mean, Samantha makes a great point, and it was one of the things that I was thinking about. That when you look at how do banks benefit and their customers, the stronger relationships is exactly that. Why do it would be great if my bank, because ultimately we all have a main bank, wouldn't go through the process every year of trying to sell to me things like credit cards and loans and things like that, which if it looked at my account, it would know I don't need them and I don't want them. And ultimately, what that consistently does is, for a bank, by getting on top of that, it reduces all the costs of having to go through that process of trying to sell to their customers who don't need those products. And more importantly, when I get stuff through the door, I think my bank knows nothing about me. They clearly don't know that I have this, yet I've got my mortgage with them. They clearly don't know I have that. And so I think those improvements will come once they start to getting access to data is one thing, being responsible and using that data in a way that everyone benefits from it is completely another thing.
I completely agree. And if we could look to wrap up then, we've seen, and we brought up earlier, Sam, if I could just get quickly your point of view on this. Are we going to continue to see a divergence of success of open finance due to different regulations? For instance, the one in Australia being far more all-encompassing compared to the one in Europe.
Well, I think actually what it does is just creates kind of a global competitive state rather than, so the UK is desperate to stay at the forefront of what they've, in effect driven through with the, in the EU. The fact that Australia is now kind of nosing ahead will really upset the UK, and the fact that the US is lagging behind, that'll upset them. So no, I actually just see it as being incredibly competitive in terms of the environment because of the countries that want to keep transforming themselves. Without technology, the world that we're going forward in can't really exist. It's going to have a massive impact on us, and so no, I think kind of game on, in my opinion. But we could see Brazil that kind of marches ahead because Brazil is embracing open banking. So I think it's okay to have the different countries at different rates.
Jason, could I get your perspective? Obviously that global perspective from Yodlee. Where do you see? Will we see a divergence of success stories when it comes to open finance due to the different regulations that we're going to eventually naturally come about?
Yeah, no, absolutely. And it was interesting when Samantha was talking about F-Data. So F-Data has it's global now. It's this global group that it's now bringing countries together and the regulators in those countries together to look at how the best way to open up the data from the big, large institutions and make it available to other institutions and customers. I remember, it was a while back, but I remember sitting down with Gavin and we were discussing, we need to set up a group. And we came up with F-Data, and then we started to get it members. So I was around when we first started. I remember the conversation. It was in the summer with Gavin. So to see where it is today and how it's developed has just been amazing. I think, to Samantha's point, you're starting to see it. All the other countries around the world that are starting to see open banking as a way forward, they are looking at saying, well, let's do this in a version 2 or a version 3. Let's make sure we offer all of the account types. We're seeing it in the US as well. We're connecting now to more and more banks via direct data feeds. It's a slightly different model, so it's individual rather than mandated. But it is absolutely going in that direction and giving you access to more data. And you're right. That should speed up Europe. Europe will start to look at that and go, well, we need to be providing more access to data via the open banking initiative, just like what some of these companies are doing, like these countries are doing in Australia, the US, to Brazil. And there's initiatives going all over the place. So, it feels like a really exciting time. And I think with the other countries that are releasing open banking in a version 2 or in a version 3, what will be interesting to see is those countries that come out and say, right, this is version 4 of open banking. What does that look like? So yeah, no, it's absolutely.
That's absolutely, it's very exciting. Hopefully as a European, we catch up from the sounds of it. But with that in mind then, to wrap up, Jason, can I ask, I think one critical failure of open banking for me has been the fact that I talk to my friends, I talk to my family, they've never heard of it. Will open finance be enough to bring the almost the buzzword to headlines, to normal lexicon?
Yeah, do you know what? I don't really know the answer, because half of me is kind of like, well, should consumers really understand and know about it anyway? They just want to, what they really want is they want to be able to use a tool or an application when they're applying for a loan, or an application when I'm managing my finances with my advisor, and it just works in the background. I mean, do I really want to know? I mean, I know most people, if I talk to them about, do you know you can access your data in this way, they'll switch off and they go, oh God, it's Jason. Don't let him come and talk to us. Talk about data again and this thing about open finance. I would just smile. So I think ultimately, as long as we get it right and as long as it's adopted, all consumers are interested in, I personally think, is the solution. And does it do something in real time versus 2 days? Do I benefit from it? So, Samantha's half-baked idea, which is my idea about the changing the mortgage rates every day, that idea is perfect. I mean, probably not that example, but the fact that things are changing daily and I don't have to do anything and it's powered off my data, how cool is that? So consumers don't care how that works. It's a bit like a motor car. If we keep with the analogy, I don't care how my engine works. I just want to know I can get in my car and go fast.
I completely agree. Well, Jason, you're in a safe space. You can talk about open finance all you want to us. Sam, now we're hearing different regulations, different adoption rates of open finance around the world. Do you think open finance is going to have enough power to actually become part of everyday speech? Is everyone, the normal person on the street, going to be aware of open finance? Is it finally going to be enough?
Well, it's definitely going to be enough, but it's not about the consumers being aware. So the consumers will be, I think, none the wiser what's driving some of the changes we're seeing. But it is genuinely, back to my electricity analogy again, I don't think any of us need to know how it works. I mean, when you switch that switch on, it's magic, right? And then the dishwasher appears and all these other lovely things. And to be honest, half the time we forget, until we have a power outage, don't we, how much we rely on something as fundamental as electricity. So that is where it's heading. And we're not going to be able to operate without it.
Definitely. I completely agree. And it's really exciting to hear where this is going to go. Just as kind of always in the background, but ultimately working towards the consumer, which I think something has come about because of artificial intelligence, machine learning, just being able to power this for the consumer. So I'm very excited as a consumer myself to hear where this is going to go. And I just want to say thank you to both of you for joining. It's been absolutely enlightening finding out about open finance from specialists like yourself. So thank you very much for joining, and to all our viewers for watching the show. You can catch the rest of the series and much more over at www.fintechf.com, and of course YouTube and LinkedIn, where I will see you there. So thank you very much, and I'll see you soon.